The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Up 12 on the S&P, Dow's up 189, the Nasdaq's off 2, Russell 2000's up 1, and as always, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
As I said a few days ago, I decided to go ahead and cover my short positions, some winners, some losers, because mostly I had options. And, of course, the longer you hold them, the worse it is. And then there's nothing worse than having them go sideways, which is what I suspected we were going to do because of the pattern and the action of the big guys on Wall Street. Well, I think I've been right for 3 days. We're in this range from about 2750 to 2770, about a 20-point range. Looks like they're probably going to, looks fairly close to 2760 close on the day-to-day. Now, next week, start seeing volume probably decline Wednesday, I suspect. We're going to go into the 4th of July, which is on Wednesday that following week. So it's kind of chopped up. People still have to show up on Monday and Friday. But we'll have a lot of people like me taking the week off since it extends it at least one day. If you're going to take vacation, you might as well take it back to back and exchange and pull those out just a little bit. But of course, we're probably going to start to see that volume a little bit decrease. So there is an opportunity. Why I don't think that the index are going to move a lot. Probably there is an opportunity to watch stocks that are highly shorted and maybe go into a squeeze into that time frame. That's what we'll be looking at in the daily newsletter and the Tech Insider, the longer-term investment one that we're trying to hold products for longer time frames. It looks to me like we're probably going to have to wait until after the 4th of July to get anything. I'm actually writing the newsletter, just about ready to send it out about 3:30 today. And probably subscribers will get it about 4 o'clock. But it's been one of those weeks where I got into a subject in the Tech Insider, and every time you dug, it just seemed like the hole got bigger. You couldn't shovel, you pull one shovel full out, and you'd have to put 2 shovelfuls back in. I don't know how it works, but certainly seemed like I got into a subject that was Alice in the Looking Glass. I continue to go deeper and deeper in it. I think it's going to offer some opportunities. The thing is, sometimes technology is incredibly technical, and I spent the week on that. Probably have a bigger newsletter on it next week. But some subjects you can't even just get into a whole week. So even with the last couple of days, I've been reading and looking. I think there's a great opportunity. But man, you just sometimes all the work in the world can't get it done. As my boss used to say, 9 women can't have a baby in 1 month. And I think that's the position I've been in this week. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always put a message in the den. But for the most part, I'm looking for narrowing markets into next week. The Dow's kind of bouncing here today. Of course, a lot on energy news, although I think either the bounce was – certainly the news today wasn't bullish. Maybe it just wasn't bearish enough for what people had priced in. The Baker Hughes numbers at 1 o'clock were incredibly bearish because you had 7 wells closed down here in the United States, but you had 17 open up in Canada. So we're starting to see a lot of the early springtime effort to get a lot of those wells producing up in the Great White North, certainly coming to fruition. Got a few stocks to look at with earnings and news. Got a few other things looking at, but at this point, I'm not expecting a lot. We're probably going to have some kind of event, i.e. news, to get us to break out of this range. Everything I'm watching is the same thing as the last 3 days. When the S&P gets down around 2750 on the cash, they get to selling a lot of puts, and it gets above 2760 on the cash, they get to selling a lot of calls. That generally is a good indication that they think that the market's going to go sideways for a while. Look forward to your emails today because it is going to be a little bit quiet, and maybe the dulcet tones of you as a caller at 877-927-6648. So let's do this. Let's go right to a little bit of history.
And it's all just a little bit of history repeating.
On this day in 1775, Congress issues 2 million of bills of credit, i.e. the dollar. By the spring of 1775, colonial leaders, concerned by British martial law in Boston, and the increasing constraints of trade, had led their forces in a battle against the crown, but the American revolutionaries encountered a small problem on their way to the front. They lacked the funds necessary to wage a prolonged war. So they got the bills out there. They started printing something called dollars, and they had some green ink, and they started trading these things around. It wasn't too much longer till we found out that a $1 bill became synonymous with the price of a deer, i.e. a buck. And both playing and eating hands of poker were determined by that. $1, $2, $3, $4. And of course, if you ran out of money, you just went hunted some more bucks. And that's why we have bucks. That's it. Pretty simple, pretty easy to follow. Anyway, please call with whatever you got going on today. Do we have enough time to get this in here? We'll go ahead and bring it up anyway. A lot of news. Probably the most interesting to me, we won't get it all in this segment, is CarMax, KMX. This is, of course, the car dealer. And they blew out earnings today, CarMax. And the reason is rather surprising. Went through the call, and even though new car sales are down, guess what's up? Yep, the money that they're making on used cars, which is where these car dealers traditionally make most of their money. There isn't a lot of money selling new cars for the most part, because you can buy the same car in multiple lots. Guess what? When things get tough, when interest rates go higher, people look for used cars. And that's when the price of used cars gets a little bit more margin on the street.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. CarMax, anyway, nice bounce, but these guys get a taste of the higher interest rates that come on used cars. And it's not only that they're making some money more on the used cars, it is something they call the back end, which is each month that someone makes a payment, they get a pretty hefty taste of that. So selling a used car, pretty good. Selling a new car is okay, but selling a used car is like selling 3 or 4 new cars. And as the interest rates continue to move higher, that will only add more to these guys. So not always a bad thing to see new car sales starting to slump, especially with the price of them. But interesting nonetheless. It is one of the big bouncers out today. What else is on my list? We talked about in depth Red Hat yesterday. They are moving I need to turn that off, don't I? Or turn that down. There we are. Need to say that this company looked weak. In retrospect, probably should have stayed short. Just wasn't getting a lot of love up there at the top, and one more retrace tie. But it certainly did look weak. Back into the March 28th low, 143.31 at 4.5 million shares. 10 million shares today as we go and break that to 141.53. Again, these companies more and more as cloud companies come on board, they don't need as much of the services of Red Hat. And as cloud services consolidate through Google, Amazon Web Services, and Azure services for Microsoft, it becomes tougher and tougher to be the odd man out. Certainly, those companies have their own inside uh, ability to do whatever they need, programmers, all that, without the help of Red Hat. And of course, they've got such massive facilities that they're probably not going to pay another company to do it. They're probably going to have their own in-house talent, maybe use Red Hat a little bit. But this has always been the thought that all the naysayers in Red Hat said, which is the overall consolidation of cloud services into a handful of 3, maybe 4 people is problematic. And I think we probably have seen the heyday of Red Hat. I don't think that we're going to see anytime in the near future it back up to the 177 level. This, I think, was way over the tips of their skis. And the question is, as long as consolidation into those big 3 web services platforms go, is there a big future for Red Hat, or just servicing the second tier and third tier companies? And that's probably more like it. Do these guys go out of business? No. Do they get to their wonderful days of yore just, 5 days ago? Man, I think it's going to be very tough going forward. Give me a call at 877-927-6648. Got CarMax. Haynes came out, but they're not doing much. A couple other companies came out, basically flat. Want to look at Micron, a lot of rumors rotating around both Micron and NVIDIA. And of course, NVIDIA's earnings, you didn't really see much. They kind of kept the stock up. It opened lower, higher, kind of bounced around. You are in this gap up area that had some fairly decent volume, kind of down on lighter volume. Could this get to 55? I think it can, but if the volume does not pick up, this is looks like maybe at least partial support on Micron. The rumors all wrap around NVIDIA for Micron, and that is that NVIDIA, at least what they're pumping, since I can find zero to actually back up any of the things that a lot of the people are actually saying and spreading around the internet over the last couple of weeks, is that NVIDIA had to or has to take back 300,000 chipsets that they overbuilt for. And of course, the same thing that I never listened to, because NVIDIA never said that Bitcoin mining was a huge deal for these guys. They kind of went the way of machine learning, where AMD certainly went the way of Bitcoin. And I think it's got a lot more exposure than NVIDIA does to that part of the business. But to me, it was probably a little extended already. And a lot of this discussion, which we have no idea which is right or wrong, and when are they going in for earnings next? Let me pull this up. NVDA. August 9th. So we've got, 5 weeks, 6 weeks before they have earnings. So I think we're probably within, I think they go into the quiet period 30 days before. So maybe we get a little announcement from these guys, pre-announcement, and better guidance before they go into the quiet period. It may be only 2 weeks, but I think it's a month. I'll have to go dig that up for them. But watch for some action, because I think we're probably going to get some kind of pre-announcements for NVIDIA, just because there's so much news out there, uncorroborated, both pro and con on this, that I think they need to come out and say something, but you never know if they will or not. I think if they're going to miss, they certainly will come out and say something. Again, 300,000 units, pretty big, but these guys have been selling millions. And the question is, does this delay their next rev of new video chips that were supposed to come out in September? And a lot of people are saying, hey, they're just going to delay those couple of months until they run through the rest of these 300,000 units that came back from a handful of suppliers that make video cards under the NVIDIA banner and brand. Not a lot of volume today. You're kind of back in there, but when you're looking at Micron, the thing is that NVIDIA makes a deal with Micron. So if there's 300,000 chips, NVIDIA probably also has something like probably 1 million or 1.2 million memory chips to go with that, because they made a deal at the very highest level. NVIDIA makes video cards, but they also have like 5 partners, PNY and EVGA, and just man, trying to remember how many there are. There's probably about 5 big ones that I've seen or heard from before. But the question is, at that point, how far did they have to push off the new chips that a lot of these gamers were waiting for, and where there's going to be some fairly large margins as they go from what's now the 1080 series, whatever the next series is. I don't know if it's a 1180 or what they're going to call it. But a lot of rumors, and not a lot of facts that we can dig up.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. I wanted to look at a handful of stocks, see how they're doing today. Beazer Homes, Why the energy is about the same as the way up on the way down. It is starting to wane a little bit. Um, what was kind of interesting to me is the light volume in the last 3 days. May 16th, we saw $14.15 with just a little over 800,000 shares. Today, 300,000 shares. Yesterday, we had 284,000 shares. Today, before about 300,000 shares. So these things may not bounce, but certainly look like they have the ability uh, to bottom. Let's take a quick look at Lennar. Kind of the same thing. You had one big down day where you got a lot of energy, and then it's been kind of light volume. Last major low on this was May 16th. We haven't pierced it yet. It was right at $50. That came in with 6 million shares. Today we've got 3.3 million shares, so just about a little over half that right now. So why we did have a little more energy on the way down, you probably need some consolidation. These things may have bottomed at least for a little while. One of the other ones that was interesting, caught my eye, has been PayPal. This has been going into the $86.32 high from January 31st, $86.32. Spiked through it yesterday with 8 million shares, which is just half. We're back into the trading range today. And again, a lot of this energy off of May 3rd, just not all that exciting. So a very light volume move back up into these highs. So we've got a lot of stocks that continue to look somewhat stressed. Yep, all at lows, but no volume, at least so far. In fact, we'll look at a couple of those other ones. Stocks, the TQQQ, been watching this one, made a high, went above the previous high, did so on lighter volume. March 13th, $63.51, 23 million shares. On the 20th, we had just under 10 million shares, so less than half of that. Little bit of expansion on that volume yesterday with 12.8 million shares. Today, though, just about 6 million shares. And as we see the volume kind of wane away, like I said, I think we would have to have some kind of big issue come up to get this market moving in any direction. Still looking for us kind of hanging at this price around this 2760-ish area into the close, at least on the S&P cash. Energies off almost everything from these April 25th lows have been on lighter volume. So you do have a rather brittle market. I can't go long, but at the same time, like today, you're going to get something like energy pop. Everybody rushes into it, and that's holding up the indexes, while the rest show some weakness. NASDAQ's off 14, Russell's off 1, something like that. Not a big deal. Tower Semiconductor, when we look at this, been watching it hit its low. Little bounce today, but not much. My guess is we're going to need a little more consolidation, and the SMH is still fairly weak. May 7th, this came down and hit $22.10 on 14.5 million shares. Got into it with this under 1 million shares, so very light volume back into this huge thrust down. You're bouncing today with 573,000 shares, though, and that's not enough. So you're going to need probably another retest around this $22. So let's go ahead and look at the SMHs. Kind of a big reversal yesterday. A retest of 106.14 on June 19th in the SMHs. That had 11 million shares. Today, though, you only have 2.5 million so far. So again, I can't see being short here, and I can't see being long. If we get a surprise, this can go lower, but you're going to have probably a surprise. Certainly don't like this thing challenging the recent lows on such light volume. But we'll have to see what happens Monday. Of course, we've been watching some of these airlines try to come up off the bottoms after the huge increase in crude prices. We've been up to this level of resistance for a while now, 4 or 5 days in United Continental. This did gap down on the 24th of January, did so on 27 million shares. Problem is that we're way over here on the right-hand side of the chart with a big day would be 4 million shares. So again, we don't have the kind of juice that go and fill that gap at the moment. And these guys have been watching the crude prices come down, and therefore probably jet fuel prices, which is 80% of the business. Now the question is whether or not prices will continue to roll. You've got to be at least very cognizant of those Baker Hughes numbers. I talked to Andy a lot. He doesn't see it that way. But for me, if someone's putting up an oil well, they're going to be adding some level of supply. And they think that the market will hold it. But generally, the record tends to be that they produce too much. Question in the den, Paz AG EXK. Let's take a quick look at any of these. See if there's anything out here. Well, there's absolutely nothing in this. This is just lower highs and lower lows. So again, you want to wait for this thing to break out and probably fade the direction. Let's take a quick look at AG. This did test the previous high, did so with twice as much volume. The December 20th high in First Majestic, $7.84, 2.2 million shares compared to the 4 million shares on June 14th. It immediately went lower with 8.5 million shares, and now you're getting back up into it with 1.7 million shares. You broke the trend line up in this, so it's hanging there. Now, the problem I have with almost all of these individual gold miners right now is the contagion that could be painted on them with a wide brush, and that is that if South Africa starts nationalizing mines, what is the payoff going to be? Basically, I think it makes anything out of South Africa a little better off. My guess, though, is the first impression is going to be that they're going to shoot everyone and try to count later. Certainly, the indexes are going to see some real problems if that happens. But you know what? You broke the trend line up. You're pulling back higher. If I was going to be probably bullish in any of this stuff, it certainly would be the metal itself. And I think I would hope for higher prices on the basis of South Africa doing something like nationalizing mines, because you know that within a couple of months, everything's going to be messed up. And that's just going to mean there's going to be that less supply of gold. We'll look at silver will come back. EXK.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And what do we got? Oh, we want to look at Endeavor Silver when we left. You know, these things are kind of high up here at the highs. You certainly don't like the volume. Let's take a quick look at gold price. What is it doing right now? Okay. 1271. I continue to think that the best thing for me, if I wanted to get long, would be probably another 50 points down on gold. And I know a lot of people that are long are saying, it's not going to do that. And it may not. But for me, about 1220 would be enough to wash out a lot of the weak hands in this market. And at that point, I'd probably much more want to be long gold, the metal, than any of the actual miners until we get some kind of resolution or the government starts changing in South Africa. Just not exactly sure. I think the other miners will be up a little bit, but my guess is that they nationalize one or more mines in South Africa that you could see that thing. You could see all those indexes massively hit. So, you know, is there a 50-50 chance they do nothing? Yeah. So I don't think you can bet on it, but I just think that there's better ways. The metal, there's nothing that's going to happen to the metal anytime soon. It's going to change the supply and demand drastically. And to me, that's just the safer bet until we get out of it. If you could get into a mine that you knew didn't have anything to do with South Africa, I guess that's part of it. But like I said, I suspect that when these things, if that ever happens, get to selling, they're just going to sell everything. And then then at that point, if you know that it has nothing to do with South Africa and has a stable government, and is in a stable country, they probably are going to vastly outperform the rest of the market. But that is just me. As Mr. Miyagi said, best way to avoid fight, not be there. And I just don't want to be around anything that's going to get tainted by probably what is a broad brush of nationalism. So what else do we have out here? But that's just me. I do not know the future. I merely practice knowing the future, or predicting the future. Okay, let's look at some other ones out here. We talked the other day. I wanted to see how we were catching up here on the Direxion Bull 3X from YINN, the Direxion levels. And of course, kind of interesting to watch these tests the last couple of days. February 9th, 29.56 with 3 million shares. Volume accelerated after we talked about it yesterday. You got 2.4 million shares, but still 600,000 shares light yesterday. A little bounce out here today. Man, this is close. There's nothing out here that says, if this thing was 500,000 shares, I think you could make a case that China was ready to actually bounce. But you almost really need a close above that 29.56. You certainly don't have, you have accelerated volume yesterday, but nothing as a follow-up today. You've got two gaps already down and the possibility of one more gap down, which is what you don't want to see. So if this thing gapped down one more time, kind of like it has in the last week here, let me zoom in here so you can actually see those. Okay, so you've got this gap on the 19th down, and now the gap from yesterday on the 21st down. You normally get these same kind of symmetric gaps. If we see something like that on Monday or Tuesday, question is, can you get to this big gap at about 23.75? And again, I think you're going to have some kind of monster news that I don't see out there. We've basically talked about been told by this news about all the possible things that can happen. Maybe there's something we don't know about yet. But this one I'm watching very closely to see if there's anything going on in it that we could see a change in. But that is kind of it at the moment. Let's go to some of our emails here. Take a look and see. Okay. Let's look at Netflix, NFLX. I think we just looked at it. Certainly, it looks like, you've got at least some sellers up here. Maybe not enough, but you got 3 candles up here. Yesterday, we went down a little bit on higher volume, but today, nothing. And that is a problem. Yesterday, you had 18.4 million shares to today's 7.5 million shares. And again, I don't think that I wouldn't be going long, but at the same time, we need some kind of signal out here. If you think these things have hit a high, it hasn't broken the trend line on the way up. And you need at least 4 or 5 more days. So we all thought, or at least many people thought, that this week was going to be a big signal in the markets. Turned out to be kind of a fizzle, both up and down. Next week, volumes start to decline. Then we come back after the 4th of July week, the 4th of July midweek day off. And we're going to really kind of look at, I think, that point to figure out whether these things are going to start selling off or going higher. There's a handful of these sectors that look like they're starting to wash out, and that would probably be a bigger thing. I don't understand why Netflix would go any higher. I know a lot of people could make arguments why it won't go lower. And maybe that's the best argument for it just going sideways. So don't see a lot of reasons to be long this thing. If you held it this long, if you had the fortitude to do it, I don't know why you don't take your money. Not go short, but just take your money. Okay, question about Google is next. And again, this tested the previous high, did so on higher volume. So you're probably going to get a retest of this 1201.49 from June 20th. You did it with 2.58 million shares compared to the 1.57 million shares on January 29th. So you did test a previous high. What you didn't have is the same thing that nothing had, which is energy off these April, May lows when this thing has gone back up. So you have kind of a weak market, not at the high in volume, but certainly in the energy that came up. You're probably going to get a retest on it. And if you're thinking about going short, then your targets would be $1,150 and just over this gap, just over $1,100 both. So I can see what you're looking at. The one thing I dislike is the higher volume at the high. That probably just means you get one more shot, one more bite at the apple, which we're going to talk about this in the next hour with Tom O'Brien. This thing's just kind of going sideways here, but some interesting news with them and Qualcomm and Intel. Ooh, what a brew! We'll be talking about that in the bottom of the hour with Tom O'Brien. Finish the show, wrapping up. Be back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're turning about 4.3 billion shares, so it is going to be kind of a light day. And again, the volume came up a little bit on the downside yesterday, but not enough to break the lows. We're going higher and certainly not going to have enough volume today to break any highs out. My guess is that we close out fairly close to this area at about 2760 on the S&P cash. And is there a lot else going to happen? Not really. It's going to be about Monday and what happens over the weekend and the reality of what happens. And I guess a lot of today's action is just the industrial part of the market doing a little bit better with crude being a little higher. But then we see a lot of weakness still left in some of these stocks in the NASDAQ, like Micron being off 3.5%, 4%. We look at NVIDIA. These are kind of on rumors now. Question is, do we have anything else more happening in it? And will everybody forget about it as they leave for their vacations and workouts? Kind of hard to say. I just don't see enough energy to break one way or the other. And again, I don't know why you need to put money at risk. No position is sometimes a good position. A handful of stocks out here probably have some opportunity, but the vast majority of them do not. We don't have a lot of things breaking new highs. The IBB is one of those. It's one of the few kind of hanging up at these highs that it hadn't seen for a while. Got a little of a pullback, but can this make it back up into the 117 area where this thing gapped down, excuse me, going back to the 30th of January? This certainly has probably been one of the weaker ones that has actually bounced. Going to look at a lot more about this sector on Monday when we do the show. And catch me in the bottom of the hour, next hour with Tom O'Brien, the Tech Insider segment. And we'll see you Monday. Same bat channel, same bat time. Remember to sell when you can, not when you have.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.